Welcome, everyone. It's like we're letting most people in right now that are in the waiting room. I'm sure some more will be hopping in here shortly. Thanks for joining us today. Give us another maybe 1 or 2 minutes and we'll get going. All right.
Thanks for doing this, Kyle.
No, my pleasure. Thanks for, I'm glad you're able to connect with us tonight.
Hey, Kyle.
Hey, Melissa, thanks for hopping on.
Absolutely.
All right, Francis, are you ready to get started here?
Yes, sir, I am.
Okay, great. So everyone, I'm going to go ahead and just mute everyone real quick here, just so that let me figure out how to do that really quick. Mute all. Okay. You are allowed to unmute yourself if you need to ask a question. Thanks for, first of all, thanks for joining us this evening. I'll be distracted here a little bit, letting people in from the waiting room. But anyways, thanks for joining us this evening. My name is Kyle Fafi. I am a real estate agent in the Austin area. I've been a real estate agent in the area since 2010. You've received an invitation to this through a number of different ways. Either you're in my neighborhood of Siena, or you're a friend or family member, colleague, past client, anything like that. This is a workshop today about how to protest your property taxes, or more appropriately, I'd say, how to protest the values. We'd all protest our property taxes, but I don't think the county or the state is going to care if we just don't like our property taxes. We're here to talk about your values and what you can do about it. I'm an expert in helping people purchase and sell and valuate real estate. I'm not an expert in property taxes. I get a lot of questions on those, and I can answer what I answer what I can, but ultimately, I'm going to recommend that you turn to the experts in property taxes. And for me, the people that I recommend is Texas Tax Protest. They're the experts in that field. They're going to here to answer some questions. They have some presentation they're going to go through at the end. They're going to answer questions. They have a quiz that they're going to do that you can win a few gift cards. The only other thing I will say is that I am going to post in the comment section a link to where you can request comps. If you like any comps, I can provide those to you for a property tax, or just to figure out if your valuation's off or not. Obviously, Texas Tax Protest can do that as well. But I'm going to share that link with you just so you have that available. And then for now, I'm gonna mute myself. And Francis, the table's yours.
All right, Carl, thank you very much. Can everybody hear me? Awesome. So yes, so it's a workshop, how to protest your property taxes. Yes, as Kyle said, you can't really protest your taxes, but you can, obviously, it's the property value. But in general sense, you're protesting your taxes. So special thanks to Siena today, of course, to you, Kyle, for giving us this opportunity to make this presentation. We are Texas Tax Protest, and hello to everybody. Texas Tax Protest was founded in 2010, so we've been in business for about 12 years now. We've grown exponentially over time. Over the years, we've grown our commercial and residential client base. And over the last few years, we've gotten into business personal property as an area that we help owners file protest and appeal their values. We represent over 50,000 accounts throughout Texas. We manage both residential and commercial property values across the state. And we represent clients in all the major counties, obviously, including Williamson. So this slide here shows you a picture of property types that we handle. We handle all the major commercial property types like multifamily, industrial, office, retail. And like I mentioned, we just added business personal property, which is your fixtures, furniture and equipment. If you run a business, we can handle that as well. On the residential side, single family, rental portfolios, builders portfolios. We handle accounts from management firms, property management firms, as well as financial planning firms, mostly trust accounts and things of that nature. This is our team. You have Odette, Blair, Cree, and myself. I think I'm covered there, but I'm somewhere in there. So let's talk about property taxes. So this is an example of the notice of appraisal. I'm pretty sure most of you must have received one if you live in Williamson County. Williamson Central Appraisal District sent out their notices, I believe, around April 15th. So most property owners throughout the county must have received it. It's a one-page document, if you like. So it gives you, already tells you the appraised value, the current appraised value of the subject property of your house. So it will tell you last year's value and this year's value. The example we are showing here is 2020 and 2021, but in this case, it's going to be 2021 and 2022. It also tells you the deadline to file a protest is typically 30 days from the notice date, or May 15th. Since May 15th falls on a Sunday this year, it's May 16th. So, have that in your calendar, mark your calendar, May 16th is a deadline. Also, it will give you an estimate of your taxes, but this is just an estimate. It's not your tax bill. They're using current tax rates to determine that estimate. They haven't, obviously the tax rates will be published sometime in September, October. Talking about taxes, this is an example of a tax bill which comes out or which is sent out sometime in November by the county. And if you're a property owner, you must have received one. So the taxes for last year, for 2021, were due January 31st of 2022. So yes, so that brings us to what is property tax protest. So we hear this term protest. What is it to, what exactly is it to protest your value? So the Texas Constitution gives homeowners the right to file a protest. So if you receive a notice of appraisal, what the appraisal district is simply saying is, this is what we think the value of your property is. It's not set in stones. You have the right to contest that value or protest that value. And obviously, you have to file a protest and follow up with the appeals process. Well, I mentioned May 16th as a deadline for this year. If you are filing a protest, there are two ways. You can go to your informal hearing where you sit with an appraiser, and basically an appraiser will ask you to provide evidence. It could be pictures, or it could be repair estimates, things of that nature. And typically the appraiser will settle, or you will negotiate a value with the appraiser. And if that's the case, if you're good with that value, you don't need to go to your formal hearing, which is the ARB hearing. The ARB hearing on the other side, on the other hand, rather, is a more formal hearing. It's a 3-man panel. You walk in there, there's typically the chair that sits in the middle and 2 other members. They act as a jury. They weigh evidence, the district's evidence, and weigh the homeowner's evidence, and they will make a decision as to what they believe or feel the value of the property should be. County protest process. So this is the cycle, the annual cycle of the protest and appeals sequence of the Central Appraisal District in Texas. So January 1 is the assessment date. That's when that's the valuation date, if you like. So April, May is when the notices are released, May 15 to be precise. The deadline to file is typically April 15th is the notice date. May 15th is typically the deadline. Between May and July is when property owners go in and protest their values, whether you're doing it informally or doing it formally, going in front of the ARB. Typically is between May and July. July through September, the local taxing units will adopt budgets and set the tax rates. October through January, tax bills are mailed, and the tax assessor collector starts collecting property taxes. So, and the cycle repeats itself. This is the Texas tax protest process, which mirrors the county process, because we work accordingly with the county. That brings us to mass appraisal model. Before I start talking about the mass appraisal model, the mass appraisal basically is a method the Central Appraisal Districts have adopted in valuing properties. So in a nutshell, the Central Appraisal District must appraise all properties within their county at least once every 3 years. That means appraisers for the larger appraisal district must appraise between 15 to 20,000 parcels. So by law, each appraisal district should appraise at least 1/3 of the county. Due to large number of properties, the appraisers can only use this mass appraisal model. So by definition, mass appraisal is a process of valuing a universe of properties as of a given date using standard methods and employing common data and allowing for statistical testing. So to dive in on that, the universe of properties is typically your neighborhood. As of a given date is January 1. The methodology is using sales prices, price per square foot, rental rates, things like that, employing common data, using market data, and allowing for statistical testing. The statistical testing comes from the Comptroller's Office. So at the end of the reappraisal period, the Comptroller's Office will do what they call a sales ratio test. And each appraisal district is supposed to write a report and present it to the Comptroller's Office. Basically, is to test their appraised value against sales prices of the same property. So it's a way to audit what they're doing. Basically, it's a way to measure how accurate their numbers are, their values are. Talking about mass appraisal model, so the Central Appraisal Districts will group properties into neighborhoods. When you hear about the term neighborhoods, you think about subdivisions, but it could be larger than a subdivision. So a neighborhood is typically made up of like kind properties. So if it's Fox and Jacob neighborhood, they're all going to be very similar, same market appeal. share the same socio-economic factors. Some neighborhoods could be as large as 5,000, some could be as small as 50. So it does vary in size. This is an illustration or a depiction of a neighborhood. If you look at the first grade there, that's a typical residential neighborhood in lots and blocks. But if you look at number 4, it's a mixture of some commercial in that neighborhood. You see that big patch there that could be multifamily residential within that neighborhood there. So that brings us to the median level of appraisal. This is a typical bell curve. I'm going to spend a little bit more time here. For the Central Appraisal District, for the most part, the B column is the mean or the median. So they use the median or the mean to determine where properties should fall in. So when they do their reappraisal, when they build out their mass appraisal model, the whole idea is to have most of the property within the B column. So if you notice, it's normally about 1 standard deviation from the median or the mean. Collectively, they would like to have 95%, maybe 90% of the neighborhood within column B. So column B is where most properties fall in, and they're considered fairly valued. Column C, on the other hand, I wouldn't say undervalued, but below the median value, right? So everything under column C are properties that are below the median value. And it could be that, in that neighborhood, it's an older neighborhood, it's a transitional neighborhood. Those properties are not well maintained. They're in poor condition or fair condition, while the ones in B are more of average and good condition. Column A or section A is the ones that are relatively overvalued compared to B, and it could be the conditional rating of those are more superior. That's where you see properties that are completely remodeled. They have a new kitchen, a new bathroom, and things of that nature. So it depends on where your property falls. If a property falls under column B, there's a fair likelihood that you may not get a reduction. However, if you are within the C column, the chance of getting a reduction is very slim. However, if you're in the A column, there's a higher probability or likelihood of getting a reduction because you can demonstrate that, hey, look, I don't have all those upgrades you think I have, by presenting interior pictures of your house or even exterior pictures to show that there's deferred maintenance or structural issues. So in a nutshell, that's what that bell curve represents. So yeah, we can go back to the chart. Yes, sir.
Quick question about that, but they're not going to tell you if you're in A, B, or C, or is there a way for us to know? Or are they labeled and it's something that we can know, or is it just the function of how the appraisal adjustments play out?
Great question, Kyle. So the Central Appraisal Districts with technology, they've gotten much better over the years. I know with Dallas Appraisal District, they give you a tool, you can log in, there's a portal, you can log in and you can pull all the properties in your neighborhood. You can export it to an Excel file and you can rank it from high to low and find out where you are, right? So you can rank the values from the highest to the lowest, or you can rank it based on square footage from the highest to the lowest and find out where you are. So the ones in the middle, let's say they're, I don't know, let's say there are 80 properties in your neighborhood. So, you divide it by 3, say 25, 25, 25, or 26, 26, 26. If you fall within the first 26, that means you're in the higher end. If you fall in the middle, that means you're in the B end. Or if you fall in the lower end, that means you're in the C end. So And if you find yourself in the top level, there's a high likelihood that you could get a reduction if you can support conditional issues, right? If you can demonstrate that, look, I have foundation problems, or my roof is leaking, or I haven't remodeled my kitchen or bathroom, and you have interior pictures to demonstrate that, there's a high likelihood that you could get a reduction based on that.
Thank you. One more quick question based on what you were just talking about. You said that the Texas law requires each appraisal district to reappraise the properties or appraise them once every 3 years, correct?
Yes, sir.
So why does it seem like the properties change value every year?
That's a good question. So by law, they are required, is their discretion, by discretion, to appraise at least, they must appraise at least once every 3 years, but they have the discretion to appraise the entire county if they like. So recently, over the last 5 years, with property values trending upwards, Dallas County, Harris County, the major counties, they've appraised almost 100% of their neighborhood. Just to meet the market trend, so you find that in counties where there's more rural parcels, so in counties where there's more rural parcels, they don't appraise every single year, so they have to appraise at least once every 3 years. All right, so this is the Siena Community Statistics. It just shows market trends there over the last, let's see, the median price is $500,000, an increase of 49%. That's just a snapshot of what we pulled out of 57 sales, 23 active listings, and 0.3 monthly inventory. I was talking about recent purchases. So there's no better comp than the purchase price of your property. So let's say you purchase a property, it was exposed in the market or in the multiple listing service for a considerable period of time, and you use a professional agent or realtor. The county appraisal district will go through a qualifying process to qualify your sale. So just because your property sold or you bought a property does not automatically mean that it's market value. They have to qualify it first to determine whether it's an arm's length transaction or not. You don't have to disclose your purchase price to the county, but obviously they have access to the multiple listing service. They use that tool to determine sales prices, and they use it to develop their sales models. So some potential changes that could follow on your tax bills. So let's say you purchased a house or you have an existing home and there's an addition that will trigger an increase in value, and that will result to an increase in your tax bills. Same thing, you add a new pool, or you upgrade your outdated kitchen. Things like that will obviously increase your property value and result into a higher property tax. Or you purchase a house that has an over 65 exemption and a homestead exemption. Those things falls off right after the transaction. So if there's an ownership change, the previous owner had an over 65 exemption. Obviously, if you're not 65 years old, you won't qualify for that exemption. So you find yourself paying relatively higher property taxes.
Hey, Francis, I kind of wanted to just step in and say something about the last slide.
Sure.
In regards to the purchase price, what Williamson does, it's a little different than any other county in Texas. Most counties will just accept your purchase price for the value that it was, no matter when you sold it throughout the year. But what Williamson does is they take your purchase price and they add a time trended adjustment to it. So let's say that you sold it in February of 2021, they'd actually be adding probably $20,000 to $30,000, depending on the time trend analysis, to the purchase price. So essentially you're not getting your purchase price, you're going to be getting a time trended purchase price in Williamson County.
You're absolutely right, Blair. So some other counties will do it. I know Dallas does it. I know Collin County will do it. And if you look at appraisal principles under USPOP, the uniform standard, you are allowed to do what they call time adjustment. But the question is, do you have enough data to support that time adjustment? So that's what these appraisal districts lack. They will arbitrarily, in some cases, bump it 5% per month, but where is the data to support that? So we do a lot of market studies. We use a lot of MLS data to do market studies. So we track market adjustment trends in different counties. I know we do that with Dallas, with Collin, with Tarrant. I know we've done it with Harris and Travis as well. Williamson is a unique case, if you ask me, because they're a little bit more aggressive when it comes to time adjustments.
Right. And also it's interesting because even if you sold it on December 31st of 2021, they add a month's worth of time adjustment to it, even though you're one day away from the valuation date of January 1st. It's really kind of,
yeah,
it's crazy.
Yes, I agree.
All right, I have another question on the specific market value. I bought a house last year. My parents bought a house last year. We found, because of the market last year, we were appraising under. So in that case, would our appraisal document be something that we could use versus the purchase price of our home?
They're going to want the purchase price.
Okay.
But they most likely already have it. So you could try to use your appraisal and see if that works, but they most likely already know the purchase price.
Mm-hmm.
Yeah.
Okay.
But if they don't know the purchase price, you obviously don't have to disclose that. But the appraisal is evidence that you could use to disclose.
Okay. Thank you.
I have a question.
Sure.
So like I'm looking at mine now and it's, homestead cap value. How do I know that my homestead was actually accepted or not? Is there a way to tell on my appraisal if it was accepted or not? Because it seems like it went up 10% from last year. Is 10% just the cap?
So yes. So if you have a homestead exemption in place, by law, the previous value, last year's value should not be higher than 10%. It has to be capped at 10%, but that's your assessed value. That's the assessment value. There is market value.
Yes.
Means that's the price your property will sell as of January 1 in the open market. The appraisal district can set the market value, say at, let me give you an illustration and very briefly. Let's say last year, your property was $1 million last year. This year, they bump it up to $1.5 million, right?
Right.
So by law, the cap value should be 10% of that 1 million. So it shouldn't, your assessed value will be $1,100,000, even though the market value is $1.5 million, and they can only tax you off the $1,100,000.
Right.
So how do you find out if you have a homestead exemption? If you go to your CAD page, it shows there. It's always there that if you have a homestead exemption, it will show under homestead, yes.
It also shows there are your current exemptions at the very top of the appraisal value list.
Right.
Mine
right.
shows OA, HS, and my 2 solars.
Okay.
Melissa, you should also be able to go back over the past years and look at the history to see if you're questioning, like, did they actually go up more than 10% or not? Or what adjustments were they making? You should be able to look at the past years to verify that the caps were not exceeded.
Okay. Thank you.
Get used to going to the CAD's website, get familiar with the information there. You know, a lot of times you have very useful information at your disposal. So I'll encourage everybody to go in there and just look through the website and get familiar with where things are and how you can pull information.
And I'm sorry, one more question, just because, I mean, all this, honestly, to me, this is all just gibberish to me. And I appreciate y'all putting this on because this is just a lot of information that I need. So what if it doesn't show that I have a homestead exemption? If I've lived in a house for 5 years, is it too late to file something? I know I filled one out. I know I sent it in, but I probably didn't do anything after that because I was busy doing other things.
So if you apply for a homestead, once it is approved, it sits on your account, it sits on your property, unless you sell your property. So I'm pretty sure that you have a homestead if you've applied for one. And I'm pretty sure, it's there if you go and look at it. So.
Well,
Okay.
there's a couple different things, right? So if you had just applied and didn't follow up, they might have needed some other necessary documents. And maybe if those weren't provided, maybe they denied it. Or if there was any type of deed change, so not just to sell, but any ownership change, that would cause any type of exemption to fall off. So you would have to reapply.
Okay.
But we would be happy to look. We can help you out. If you want to send us an email after this, we can look into that for you.
Yes, please. Absolutely.
Yeah, I mean, I bought my house and I was like, I bought my house, I'm happy, I'm done. So, it's, I always tell my kids, no stupid question is a stupid question. So thank you very much.
You're welcome.
I also was just speaking with another neighbor a few weeks ago, and they had their homestead exemption fall off because they refinanced their house.
Right.
And it shouldn't have happened, but it did. They called the appraisal district and they got it reapplied retroactively. There have been some fluke instances where for some reason the homestead exemption falls off even though it's not supposed to. And I've had people call back in and get those things retroactively applied. But if it never actually went through, you need to file right away.
Absolutely.
All right, thank you.
All right. Yeah. So with new construction, new construction is very tricky, and this throws a lot of new homeowners off, particularly if they purchase a new house. So the first year, normally, if the property is an unimproved lot, if there's no improvement on it, the appraisal district is going to base it just on land value, right? Let's say the following year, there's a building going up and it's 60% complete as of January 1. The appraisal district will use their cost model and determine the replacement cost new for 60%, right? And depreciate it 40%. And also the builder can apply for a builder's inventory exemption or discount rather, and further lower the value. So the taxes on a new uncompleted property is relatively lower because of one, it's not 100% complete, and two, of the builder's discount because of the builder's inventory. So when somebody purchases a new house, the following year is brought to 100% complete, the county appraisal district is going to appraise it at full market value. So you'll find this huge and dramatic increase in your tax bill. And the funny thing is, during closing, if you're familiar, obviously, with new construction, the title company will look at the previous year's taxes and determine your escrow. So you find out that your escrow I've seen people, in shock, pretty much, where their tax escrow quadrupled because of this reason. So what do you do? Make sure you file your homestead exemption, make sure you protest every year, and make sure you provide relevant evidence when you file a protest. Talking about homestead exemption, is the most common form of savings for a homeowner in Texas. So if it's your primary place of residence, you should automatically qualify for a homestead. The 10% cap, the county can only increase the assessed value of your home by 10%. So going back to the previous example, the value last year was $1 million. This year, because of the crazy market, the appraisal district has it at $1.5 million. They can only, it has to be capped. It can't go more than 10%, can't go more than $1.1 million. So your assessed value is going to be $1.1 million, and that's where your taxable value will be derived from. There are other tax credits from other jurisdictions, like the school districts will give you an exemption, a discount in your taxes, the county, and also other entities. But you have to have a homestead in place. There are other forms of exemption. There's over 65, which is also very common. There's disability, there's veteran, there's you can get a sole exemption. And just very briefly, in Texas, veterans with 100% disability are completely exempt from property taxes. If you're considered 70 to 100%, you could receive about $1,200 in tax exemption. If you're 50 to 69% disabled, you could receive about $10,000 in tax exemption. For disability, disabled adults have the right to claim a special homestead exemption, but you can't claim disability exemption and over 65 at the same time. So you have to either choose one. If you're over 65 and disabled, you can't claim both.
We have a question.
Sure.
So I'm a vet and I get a certain percentage. So that certain percentage, does it go towards the actual taxes or does it go towards the estimated value of the house or whatever appraisal?
Sorry, if you can repeat your question one more time.
So being a disabled vet, so does that discount or whatever, does it go towards the actual taxes or does it go towards the appraisal price of the house? So say I get the 10,000 or whatever, does that 10,000 go straight to the taxes, the property taxes?
Are you referring to the cap increase?
No,
I
he's-
think he's asking if the discount applies to the assessment value or to the taxes themselves.
Oh, I see. Apologies. It wasn't very clear on my side. Yeah. So the exemptions applies to your assessed value. That's how you calculate the taxable value. So, if the assessed value less those exemptions, less those dollar amounts will give you the taxable value, and that taxable value is what the county or the school district or the city will use to calculate your actual taxes.
I also have a question.
Sure.
I read here that it says solar. What kind of exemptions do solar panels provide?
So that's fairly new, and it does vary from county to county. So if you have a solar panel, if you have an energy efficient solar panel, the appraisal district can give you some exemption, some dollar amount exemption. I mean, the whole idea is to encourage property owners to use green energy. And again, that exemption is not still very clear. I've had tons of questions about that. Some appraisal districts require more information. You have to provide IRS information because the IRS typically will give you some kind of tax credit, and they'll ask for that information. Some appraisal district wouldn't ask for it as long as you have it. So
I know when I did mine, it's 100% of the purchase price. They add the value, they add that to the value and then immediately take it off. It's 100% exemption.
right. So but it doesn't. There is a depreciation over time, right? Because it's a depreciable equipment, if you like. So every year, some appraisal districts will apply maybe a negative 5% depreciation.
Williamson hasn't so far in the 4 years that I've had my panels up.
It's been sitting at 100, really?
Yep.
Okay, you're lucky. Okay, so
and that's here in Williamson County, here in Siena. And I just added another $50,000 to it because I put Tesla batteries in.
Oh, wow. Awesome.
So they added it and subtracted it.
Larry, you said that they subtract the amount of what you paid for to place the solar panel?
Yep. I basically sent them a copy of the invoices from Freedom Solar, and they gave me that. They added that to the value and then subtracted it from the value and show a solar exemption.
Right, thank you.
Yeah. So this is where I have to describe why you need to use Texas Tax Protest. That's why I use Texas Tax Protest. Yes, so we've actually developed our in-house technology very, very efficiently. And we have come to the point of providing or developing very credible reports to the appraisal district. So like I mentioned earlier, a lot of our protests are settled informally. Why? Because once you provide credible information to the Central Appraisal District and you have a history of doing that, they work well with you. So we've established that reputation with the major counties across Texas, and we keep improving on our technology. Our fees are very competitive. We use contingency fee. Sorry, I was looking for the word contingency. So contingency fee, no upfront cost. There's a small, I think it's $50 processing or admin fee that we charge. But besides that, we strictly go with a contingency fee, as opposed to some agents some agencies that will charge a flat fee. So I think besides that, our fees are very competitive. Still, why use Texas Tax Protest? Texas Tax Protest was named the best place to work 3 years in a row, one of the fastest growing private companies. You speak to a real person, we have excellent customer service, there's texting capabilities. Signing the agreement is very easy. It's via a DocuSign email that we sent out, and also we send a property questionnaire for the property owner to fill out. So the good thing about that, it gives us good information to fully evaluate the property before we file or contest value. Over 100 years of experience among our team. There's a CFA, a CPA, they're former RPAs, registered professional appraisers, they're licensed realtors, investors. I mean, we just have an all-round, well-experienced team and very experienced and seasoned property tax consultants. Okay, this is also very important. What type of evidence do you need to provide to your agent? I've mentioned pictures that demonstrates the condition of the subject property. The condition of the subject is something that is extremely subjective. So an appraiser may go out and look at the house and say it's in good condition, while somebody else may call it average or even below average. So how do you really support your the condition of the subject property? Pictures, interior pictures, exterior pictures, showing if there's any structural issues or deferred maintenance, things of that nature. If it's a recent sale, then the closing statement is very important. It just shows the purchase price. Appraisals could be very helpful. But again, what the appraisers at the Central Appraisals District do is they will look at the comparables, the fee appraiser used. So let's say you refinanced, they'll look at those comparables. As long as the fee appraiser did not go, say, 5 miles away to pull comps, if they're within the same neighborhood with the appraisal district's designated neighborhood, they will take that appraisal 9 out of 10 times. So it's important to provide that information, particularly if you want to support a lower value. Repair estimates also is very helpful, contractors' estimates, things of that nature. Move out reports that has to do with business, personal property type issues where you moved out and they're still sending you notices. Rental rates, rent rolls, mostly for commercial real estate and multifamily apartments, leases for commercial real estate. So those documents are highly important. As I mentioned, if you're a TTP client, you receive a questionnaire, and that questionnaire is fairly easy to complete. It provides us with pertinent information about your property. You have the capability of uploading pictures and other documents. It helps us, provide a more credible information to support your value. So best practices in filing and completing your protest. So protest must be filed by May 15th or 30 days after the notice. A hearing date is set for the ARB and you are notified typically by mail. Make sure you keep the letter or, put in your calendar. Depending on the county, the deadlines and requirements may vary a little bit. If you're utilizing an agent, please notify that agent. So if you file the protest on your own, you can still hire us to represent you. It's not late. We can take it over, basically. So if you hire a firm like TTP, we'll attend either the formal hearing or the informal hearing. So let's say you've already filed a protest and they haven't reached out to you yet, but the date is sometime in June, we can still resolve it informally, within the month of May or even before the hearing date. So feel free to contact us if you've even filed a protest. So if you settlement waivers is what you sign off on. If you go through the informal process where you meet with an appraiser, typically they give you a settlement waiver to sign off on if you're happy with the value. The ARB will normally send you what they call a final order, which is a more formal letter stating their ruling. Deadlines recap: January 1, values are established for tax purposes. That's the valuation date or the assessment date. January 31st is when property taxes are due. April 15 is when the notices are typically sent out to homeowners. May 16 is the protest deadline. Filing a protest, that's the deadline. July 15th is when the values are approved or certified by the appraisal district and sent to the taxing entities to set their budget and determine the tax rate for that year. October, November is when the tax statements are issued by the county tax office. Contact your appraisal district if you're not sure. The appraisal district's websites are very informative. We have Travis, Williamson, McLennan, and Hayes. Feel free, be familiar with your local appraisal district's website, know what's going on, and just keep yourself informed. So this is play game time. Is everybody ready? Okay. So this is a quiz, pop quiz, a simple, easy quiz, I think. So the first question is: a protest must be filed by fill in the blanks of the tax year, or fill in the blank after notice is received by the owner.
Raise your hand if you know the answer. I see that Melissa was the first person to raise her hand. Melissa, go ahead.
Sorry, it's May 16th or 30 days after the notice.
Correct. That's the correct answer.
And what are the prizes for getting
Starbucks gift cards. I was just about to chime in with that. So what I sent you, Kyle, to give all the people who get the right answer is a branded Starbucks gift card from Texas Tax Protest. So
There you go.
a drink on us for your intelligence.
Awesome, awesome. Nice. So the next question is: an appraisal is the process of developing and fill in the blanks value of real property.
All right, Larry, you had your hand up first.
Market value.
An appraisal is the process of developing, and that's incorrect. Market value is incorrect.
Anyone else? Take a stab at it. DJ.
Any realtor in the house should know this, right?
What was that, DJ?
Assessment.
That's incorrect.
Araya? Faria?
Fair value?
That's
It's our median
incorrect.
for fair value. Okay. I was
Sorry,
like,
that's
no worries.
incorrect. That's a good try though.
Come on, we gotta get this right here.
Kyle, you want to give it a shot?
Do I win a gift card? Developing an estimate of value?
It's actually an opinion of value.
I think we can take estimate.
Estimate is good. That's close. That's close enough. That's why I give it up. It's an
It's
opinion or
synonym.
estimate of value. You're right.
All right.
Okay. Remember the bell curve, right? That we went over. So what section of the curve is the group of properties that are overvalued?
All right, Larry. I muted you.
Remember you had the A, B, and C, right?
Yeah,
Okay,
A is overvalued.
that's correct. That's a correct answer. So next question is: what section is considered the median or fairly valued section?
I'm so sorry. I want to manage expectations here. I think Larry gets this one. We don't have 3 gift cards for each of these. So
Oh, I
we
see.
need
Okay.
one gift card for the
Okay. So
Belcher.
it's one. Yeah. Sorry
Yeah,
about
so
that. I got
just-
carried away.
yeah, no worries. So that one goes to Larry. Let's just move on.
It was in Sunday. They had to do it on Monday.
Do you want to go back to that previous slide? Maybe Larry will fill in the blanks on the other two. Larry, what's the answer to the second question?
That's B and then C.
Absolutely.
You got
That's
it.
All right. So a fill in the blank exemption is the most common form of tax savings for homeowners in Texas. What's the most common form of exemption? Come on, guys.
All right, Faria. I'm probably not saying that right, but go ahead.
Oh, I think I got muted. Homestead?
Absolutely. That's the right answer. All right. All right. So this is the last question. dash is the assessment date that values are set for tax purposes. So what's the assessment date typically?
All right, Renee, what is it?
January 1st.
Correct. January 1 is the assessment date that values are set for tax purposes. You're right, Renee.
Yay.
So questions, that's our team, Odette, Blair, Cree, and I. Any questions, please?
I know there were some questions, and I had some questions maybe that you can help with. I know one of the questions was, what is the contingency fee?
So it varies. I will say, give us a call and we'll give you a quote. And the reason why it varies, it depends on several factors. If you have a portfolio of properties, for instance, the larger the portfolio, we can negotiate a more discounted contingency rate as opposed to somebody with just one property. So I would say just give us a call.
And the contingency fee is a portion of the savings that you would save if you're successful in appealing the value. Is that accurate?
Correct.
Absolutely. Yes, sir. So the contingency percentage, let's say it's 30%, let's say it's 40%, we apply to the tax savings. So if there's no tax savings, you don't pay us anything. You know, if we save you $1,000 in taxes, let's say the contingency fee is 40%, our fee will be $400.
You save 1,000, you're gonna, and then you're gonna pay 400 for the thing. Yes.
Right. And so you would never pay us until after you found out whether you saved, and it would just be a small piece of that. So
Do you guys have any insight into, I know with values increasing as significantly as they have you guys heard anything as far as if the counties are looking at lowering the tax rates, given how much values have increased?
Carl, that's a great question. So Blair, we had a meeting the other day and we talked about that. So the whole idea is, you know, the taxing entities will like to set their budgets before they put out the rates, and the budget is correlated with the tax rate. So they use the tax rate to determine how much money they need, right? So the values are increasing at an exponential rate. The question is, how much more will the entities need in terms of their budget? Is their budget going to go up 10%, or, you know, typically they're allowed to bump up their budget 3 to 5% annually. So if that's the case, I think you will see lower tax rates across board in Texas.
Right. It really just depends on what happens with the budget. Because the budget, if the budget were to stay the same and the tax or the market values increase, then the tax rates should decrease. But if the budget doesn't stay the same, then we're not quite sure what would happen to the tax rates. They'd either stay the same, they'd increase, or they'd decrease, just depending on the budget.
Right.
Okay. Melissa, did you have a question?
I do. So say if you know, if I go with Texas tax protest and they aren't able to lower my taxes, what is the fee for that?
So yeah, so one, it depends on how much tax savings, you know, we get for you. So let's say your property is 500K, we lower it to 400K, that's a $100,000 reduction. The question is, what's the equivalent of that in tax savings? So whatever the equivalent is what the contingency fee rate is based off on. So let's say we save you $1,000 in taxes and we have you at 30% contingency rate, our fee will be $300.
I think she's saying, if you're unsuccessful in reducing the.
Correct.
Okay, I'm sorry. If we're unsuccessful, then, you know, the tax savings is zero and our fee is zero. We don't bill you. We don't charge you anything.
Right, but we do charge a service fee at the beginning, so
Right.
that's the only thing
Ye-
that you would be out of pocket for.
Yes,
Okay.
I forgot about that. Yeah, there's a service fee which we charge upfront, so that will be the only thing you will pay for. You're
Do you know
right.
how much the service fee is?
It's $50.
It was 50, I think,
Just a,
50.
yeah, just to file, it's like just an admin fee. And two, it's like, I think it's like deducted from the contingency invoice that you receive later. So it's
Right.
just more like to cover the process of filing the appeal, but then you'll kind of see it back when you get your bill. So.
Okay, great. So I got it. Thank you.
You're welcome.
Any other questions today? Larry? You're on mute, Larry.
This
What-
is Dirk.
how-
I have a
what-
question.
What percentage of clients have you been successful with? I mean, I was surprised. My assessed valuation went up a lot, but I've also got about $150,000 of cap, of quote cap loss unquote. What's the probability of something being reduced?
So Blair and Francis, you might be able to better speak about the probability for Williamson specifically. I know, historically we've had an 85% success rate for new clients, but with the increases being so significant this year, we really want to manage expectations and not promise, numbers that are no longer accurate. And I know with Williamson values going up 42%. Especially with considering the caps that you may or may not have on your property. It's just really hard to tell with how unprecedented this year is compared to previous years. So, I mean, we have a solid success rate, but I would hate to give you the wrong idea.
I think one other important thing for everyone here to know is that just because you have a cap that was applied, that you might have, your value might have gone up $150,000, but your actual assessed value is only going to go up, let's say $30,000. Just because you have the cap in place doesn't mean that you wouldn't want to file or you wouldn't want to protest. Every little bit that you can protest, and you can protest every year, but every little bit that you can protest and get it reduced, then the following year, if they're making percentage increases, then they're making it off of a smaller amount. So even if you do have the cap, don't let that hold you back from protesting your value, because at some point they're going to get it from you.
Yeah, just to piggyback off of that, internally we were talking about how this is maybe the most important year to protest in the last decade, because if you want any tax relief in the next 3 years, you have to protest this year, or your assessment value is going to be their starting place next year. So it's always best to protest every year.
Absolutely. So this year, if you have a homestead property, you may or may not see a significant difference in tax savings. You may or may not see a whole lot of tax savings this year, but it's always advisable to file your protest, because think about it, next year, if you don't file your protest, the appraisal district will start from this year's value and bump it another 10%. So if you file the protest this year and you're successful in reducing your value, even though it's not below the cap, it's still good, because you're starting from a lower dollar amount as opposed to what it should be if you didn't file your protest, if that makes sense.
Yeah, it does.
And also for non-homestead properties, if you have investment properties or rental properties, I think it's a great year to file protests, because are there going to be reductions? Yes. The question is, how much tax savings are you going to get? But for non-homesteaded properties like investment properties and rental properties, there's no homestead on it. So you have to file and save taxes on those investment portfolios if you have one.
Sounds like it's a $50 wager. If you guys are successful, you guys get more, obviously, but it sounds like it's worth the $50.
Oh, I absolutely agree.
I have a quick question. If we file this not exemption, I'm sorry, this protest, is it going to affect our exemption at all?
No.
No.
Another question along the same lines. If someone protests, is there a risk that their value actually is increased when that gets reviewed again?
Not,
No.
not because of the protest. You go ahead, Blair, but
Right. They can't increase a value from a protest. So, I mean, it can't hurt. All we can do is try to get it down. They can't raise it further. Obviously, they can raise it next year, but it won't be because you protested. It will just be because they revalued.
Yeah, they can raise your value because you protested. It used to be before the old rule, the ARB has the discretion to do that, but they put a stop to it a few years back. The ARB can raise value either, so.
Francis, I have a question about multiple properties. I have another property. Do y'all charge $50 per property, or is it $50 for a person?
So
If you have multiple
sorry.
properties, the $50 is waived. You
Yeah.
wouldn't have to pay the $50.
Thank you.
All right, any other questions? All right, well, everyone who, first of all, thank you so much, Texas Tax Protest. There's their website right there. I'll make sure that everyone that was on the meeting, this has been recorded, so you'll get a link to the recording. I'll upload it to YouTube so you can watch it at any time if you want to go back and review any of the details. I'll also make sure that you get the information for Texas Tax Protest. They obviously have their website there. Thank you, everyone who also participated, answered some questions. If I don't connect the right name with the information I had from registration, don't be ashamed, or don't be afraid to reach out to me to ask, hey, when's that gift card coming, Kyle? I'll get it to you as quickly as I can. I'm going to put if you look in the chat, I'll paste it again here, but if you look in the chat, there's a place as well that you can get some comps if you just want some more information about the neighborhood or about your area. Other than that, thank you all so much for being on here tonight. I hope this was informative. I know I learned some different things tonight, as many as I've done a few of these, but I learned some more each time. So thank you, Francis. Thank you, Texas Tax Protest and the whole team. Everyone have a great night.
Thank you, Kyle.